Welcome back to the Quarterly Call. All content discussed here is for informational purposes and is not investment advice. Please consult with a qualified professional before making any investment decisions.
Mm-hmm.
So, this week, it looks like we're diving deep into Texas Instruments.
Oh, exciting.
You've sent over the Q3 2024 earnings call transcript and their prepared remarks.
Wow.
That's some serious semiconductor sleuthing.
You really want to get under the hood of their performance.
Yeah.
TI is really a bellwether for the entire chip industry. So figuring out how they're navigating all these economic currents we've got going on
Right.
can give us clues about what's ahead for the whole tech sector.
It's true. It's true. Okay, so first things first, let's talk about revenue. Down 8% year over year,
Okay.
but up 9% from last quarter, hitting $4.2 billion.
Yeah, so that's the thing about earnings calls, right? It's not just the headline numbers, it's the context. That sequential growth, the fact that it's growing compared to last quarter, tells us things might be turning a corner even if the year-over-year comparison isn't so rosy.
Okay, so things are looking up, sort of,
Yeah.
but I noticed they mentioned something called asynchronous market behavior, and I have to admit,
Uh-huh.
that sounds a little bit intimidating to me. Did I even read that right?
You did. And don't worry, it's not as complicated as it sounds. It basically means different markets are recovering at different speeds.
Okay.
Think of it like a track race. Some runners are sprinting ahead, some are just getting warmed up. Makes it tough to predict who's going to win, right?
Yeah, that's a good analogy. Okay, so some parts of TI's business are speeding ahead while others lag behind. Sounds like we need to figure out who's who in this race.
Exactly. Let's start with the front runners. So despite that overall revenue dip, TI had some pretty impressive wins.
Yeah.
Especially in the automotive sector, they saw growth in the upper single digits between 7% and 8%.
Wow.
And get this, a big chunk of that growth is coming from China.
China, really? I mean, that's surprising considering all the talk about their economic slowdown. I would have thought that chip demand would be down everywhere.
It seems like some trends are defying the headlines.
Yeah.
Remember, China is aggressively pushing electric vehicles.
Right.
And that requires a lot of chips.
Oh, yeah.
And TI happens to be a major player in the EV space, so they're really well positioned to capitalize on that.
Oh, I see. Okay, so China is like the star athlete in TI's automotive race.
Mm-hmm.
What about other business segments? What else is showing strength?
Personal electronics had a phenomenal quarter,
Really?
surging by a whopping 30%.
Wow, 30%.
Yep, and both enterprise systems and communications equipment weren't that far behind, clocking in at 20% and 25% growth, respectively.
Hold on, when you say like growth, you're talking about growth compared to the previous quarter, not the previous year.
Exactly. Sequential growth. It's how we see if the growth trend is continuing. And in this case, it's clear that certain segments are not just recovering, but potentially exceeding pre-pandemic levels.
Wow. That's a really welcome change from all the doom and gloom we've been hearing about the tech sector. So it seems like certain parts of the tech landscape are really shifting.
Yeah.
Is it just pent-up demand, or is there something more fundamental going on?
It's probably a combination of factors.
Okay.
Pent-up demand is definitely playing a role, but we're also seeing all these new technologies driving upgrades,
Okay.
particularly in things like 5G and artificial intelligence.
Makes sense.
Those innovations require more sophisticated chips, which benefits companies like TI.
Right. Okay. So we've covered the winners. Now for the not-so-great news.
Uh-oh.
The report mentioned that the industrial market has been down for 8 consecutive quarters.
Oof. Yeah.
Ouch.
That's a significant trend, and it really highlights the challenges TI faces in achieving a full recovery.
Right.
Remember, we said that industrial and automotive together represent about 75% of their business. So the industrial market is a pretty big deal for them.
Yeah, is there any light at the end of the tunnel?
TI seems to think so.
Okay.
So while the industrial market as a whole is struggling, they did see some glimmers of hope. For example, the appliance sector is showing some strength, but other areas like factory automation and motor drives are still declining.
So it's kind of like a microcosm of that asynchronous behavior.
Exactly.
Some parts of the industrial sector are ready to sprint while others are still warming up on the sidelines.
Exactly. And that's why it's so crucial to dissect these trends and understand what's driving each segment. The industrial market is complex.
Yeah.
It's not going to recover in a uniform way.
It makes sense. But before we get too deep into industrial, I want to circle back to something you mentioned earlier, Analog revenue dipped.
Okay.
Can you remind me what exactly falls under that category at TI?
Sure. Analog chips are kind of the workhorses of electronics.
Okay.
They handle things like power management, signal conversion. Basically, they're everywhere, from smartphones and cars to industrial equipment and medical devices. Almost every electronic gadget relies on analog chips.
Oh, okay. So a dip in analog revenue could signal a broader slowdown in electronics as a whole then.
Potentially.
Okay.
It's definitely something to watch closely. But before we jump to any conclusions, let's remember that even within analog, there are different subsegments, each with its own unique dynamics.
Right, right. We've covered a lot of ground already, but there's one more piece of the puzzle I want to examine. China. We talked about its role in boosting TI's automotive sector.
Right.
But the call highlighted just how much of an outlier China really is right now. They're reporting record automotive sales there, with sequential growth of 20% for 2 quarters in a row.
It's wild. Yeah.
It's like they're playing by a different set of rules.
hmm
What's driving this surge in demand while the rest of the world lags behind? Is it purely market fundamentals, or are there other factors at play?
It's a question that's on the minds of a lot of analysts. China's rapid adoption of electric vehicles is definitely a major factor,
Yeah.
but there could be more to it. Some experts believe that Chinese companies are strategically stockpiling chips,
Let's see.
anticipating potential disruptions to global supply chains.
Okay. So it seems like geopolitics are playing an increasingly important role in shaping the chip market.
Absolutely.
Very interesting.
Okay.
Okay, and speaking of strategic moves, let's talk about what TI themselves are doing to prepare for the future.
All right.
Let's dive in.
So one of the most interesting things that TI highlighted in their call was this decision to intentionally build inventory.
Okay.
They're actually running their factories at lower utilization rates in the short term to make sure they have enough product on hand to meet demand when the market recovers.
Wait, so they're deliberately slowing down production even though demand is starting to pick up?
Yeah.
That seems a little counterintuitive. What if the market doesn't recover as quickly as they expect?
Yeah, it might seem that way, but it's a calculated gamble. TI is betting that having all of that inventory will give them a major advantage when the upturn really takes hold. Think about it. They'll be able to meet customer demand quickly and reliably while their competitors are scrambling to catch up.
So they're playing the long game, huh?
Exactly.
Makes sense. But it still takes guts to make a move like that in such a volatile market.
Oh, absolutely. Yeah. It shows confidence not just in their own forecasts, but in the long-term growth potential of the whole semiconductor market. They're basically saying, we believe the future is bright and we're going to be ready for it.
It's a good point. Okay, so bold move on the inventory front. Speaking of the future, TI's set a pretty ambitious goal for themselves, reaching pre-pandemic revenue levels by 2026.
Yeah.
Is that realistic? I mean, considering all these mixed signals we're seeing from different markets?
It's definitely a stretch goal,
Yeah.
but I don't think it's out of the realm of possibility. We're talking about a company with a long history of innovation and a massive global footprint. They've weathered storms before and come out even stronger on the other side.
So what needs to happen for them to actually hit that target? What are the key ingredients here?
Well, first and foremost, we need to see a full recovery in the industrial market.
Right.
As we discussed, that's a huge chunk of their business, and right now it's still kind of limping along.
Yeah, so basically the global economy needs to cooperate.
Exactly.
No pressure there.
Beyond that, sustained growth in the automotive sector is crucial, and not just in China. They need to see that electric vehicle boom translate into strong demand worldwide.
That makes sense. China can't carry the whole automotive market on its own, even with their impressive appetite for EVs.
Exactly. And of course, continued strength in those other high-growth areas like personal electronics and enterprise systems would be a huge boost.
Mhm.
If those sectors continue to exceed expectations, it could provide a powerful tailwind for TI.
So it sounds like TI is walking a tightrope. They need a lot of things to go right if they want to hit that 2026 goal.
That's true.
Yeah.
But they're not just sitting back and hoping for the best. They're making these strategic decisions like building up inventory to really position themselves for success.
Right, and that's what makes it so interesting.
Yeah.
It's not just about understanding the numbers. It's about understanding the strategy behind the numbers.
Exactly. And I think that's a really key takeaway for our listeners, right? Don't just focus on the headline numbers. Dig deeper, look at the individual segments, and try to understand what's driving those trends. That's how you get a sense of a company's health and its prospects for the future.
All right, so we've covered a lot of ground here. Revenue trends, market dynamics, strategic moves. But I feel like there's this one big question looming over all of this. Can TI actually pull it off?
Right.
Can they achieve this ambitious 2026 goal?
That's the million-dollar question. And frankly, it's too early to say for sure. There are just a lot of variables at play.
Okay.
Global economic conditions, technological advancements, geopolitical shifts.
So it's like trying to predict the weather 5 years out. You can make some educated guesses, but ultimately there's always an element of uncertainty.
Exactly. But that's what makes following companies like TI so fascinating. It's this constant game of trying to figure out what the future holds and how all these different players are positioning themselves to succeed in this uncertain landscape.
So for our listener who's trying to make sense of it all, what are the key takeaways from this deep dive into TI's Q3 earnings call?
Well, I think the biggest takeaway is that we're seeing a very uneven recovery across different markets.
Right.
Some sectors, like personal electronics and electric vehicles, are booming, while others, like industrial automation, are still lagging behind.
Yeah.
This makes it really difficult to predict exactly when or how the semiconductor market as a whole will rebound.
It's like a puzzle where all the pieces are fitting together at different speeds.
Exactly, exactly.
Makes it tough to see the full picture.
And it really highlights the importance of looking beyond those headline numbers, right?
Yeah.
You need to understand the dynamics of each individual segment to get a true sense of a company's health.
Right. It's not enough to know that revenue is up or down. You need to know where that growth or decline is coming from
Right.
and what it means for the future.
Exactly. Another key takeaway is that companies like TI are making strategic decisions, to position themselves for success in this uncertain environment.
Yeah.
Their decision to build inventory, even at the cost of lower short-term utilization rates,
Right.
is a bold bet on the future.
It's a reminder that sometimes you have to be willing to take risks if you want to reap the rewards down the line.
Exactly, exactly. And finally, I think the situation in China is particularly noteworthy.
Yeah.
Their rapid growth in certain sectors, especially electric vehicles, is a sign of their growing technological prowess and their ambition to become a global leader in these key industries.
It's a good point. It is a reminder that the global economic landscape is constantly shifting, and the companies that can adapt to those changes are the ones that will thrive.
Absolutely. And if I had to leave our listener with one final thought,
Okay.
it would be this. Keep a close eye on TI's industrial business.
Okay.
That's going to be the real indicator of their recovery trajectory and their ability to achieve those ambitious 2026 goals.
Wise words. A huge thank you to you for breaking all this down for us. And to our listener, thank you so much for listening to the Quarterly Call. If you enjoyed it, make sure to rate and follow our show. Until next time, stay curious and stay informed.